Welcome to the condensed version of the daily video update, where I'll go over the action in the market for Monday, July 17th, and then we'll see how things look for Tuesday, July 18th. We had another up day. There's little pockets of weakness that could be starting to creep into the market. We were up, however, with the up day, we're also in quite an overbought situation, especially in the short term and pretty much in the intermediate term as well. Long term, we're still looking okay. So what are some comments that we can make about what happened? There is slight weakness that might be entering the market. Now, one good solid up day could just wipe all that out and turn everything back more positive. At least in Monday's session, you would think certain parts of the market would have been up. They actually declined a little bit. The VIX was up on an up day, not by very much, but still, usually when the market goes up, the VIX goes down. The S&P did make another 52-week high. And the positive scenario that seems to be in the background right now this can change any time. It can even start with one scenario at the beginning of the day and develop into another scenario by the end of the day. But the idea that we're possibly going to have a soft landing, meaning that we won't have a recession, even though we're seeing economic slowdown, that the Fed is almost done raising interest rates because we're seeing inflation coming down, and that future prospects for earnings growth still looks good. On a short-term basis, though, we have a lot of things that are overbought or extreme positive. This is the CMB composite, the CCI 14 and 20, the Stochh RSI, the Williams percent R, the standard deviation chart, our stochastics, the boom based on 20 periods, and the RSI based on 9 periods. Intermediate term, we have the balance of power, Arun, the PMO studies. Our oscillators are showing some improvement, but we're still wondering about those negative divergences. The Sean trend meter, the BPI based on the S&P 500 as well as the NASDAQ 100, the boom indicator based on 50 periods, and the RSI based on 14 periods. The dollar was down and interest rates were also down, and both of these gave some support to stocks. We still have all of the yield curves that we follow that remain inverted. Sentiment is still extreme at 80, where it ticked up from 79. Our trend is positive, but even with the up day, the green line is coming down. Also, the green line is above 40, and sometimes in the past that has marked an extreme positive reading. Nonetheless, the ADX is above its moving average, and both of them are above 20, suggesting that we are in a trending environment. Our bias is positive, and our momentum is positive. The economic reports that came out, we just had one. It was the Empire State Manufacturing Survey. It came in at 1.1. They expected it to come in at minus 8.8. Last time it was up 6.6. Here's the intraday chart. We did have a higher open, not much of a gap, but we were able to get above the daily pivot. We danced along that level for a while, then we started to go higher, didn't quite make it up to R1 before falling back a little bit and just drifting a little bit higher. We eventually went above R1, but then late in the day, we saw some selling coming in and we closed pretty much at R1. Here's the growth and value chart for the S&P where we were positive. Here's the dashed line. We shot up and then were able to hang on to most of those gains by the time we went into the close. Our trend is also above the moving average. That's the black line, which we look at with the ADX, but the green line is on top, starting to come down a little bit, and it is above 40. So we just want to be aware of that, but we still default to the positive trend. Also, we're getting a little disappointed with the transports. The Dow looks like it could be breaking out a little bit, but still on an intraday basis, it has a ways to go. The transports are coming down just a little bit, and we also saw the utilities coming down, which did give some support to the S&P. Here's our ratio between the transports and the S&P, where it continues to decline. We want to see this really going up to give good solid support to the S&P. We're still above the 61.8% retracement level on the NASDAQ. The longer that we stay above this, if we do start to come back down, this may act as support. We're also showing some improvement with the NASDAQ 100. We had been battling this R1 level where we closed right on it pretty much 2 days in a row. Well, we were able to break above that and close above this R level. Again, the longer we stay above this level, if we start to come back down, the more this area had been resistance, it may turn into support. We're also looking at the FANG index. It closed at a new all-time high. We broke above this previous high. Longer term, with the S&P weekly chart, we are still battling with this resistance. We don't really know if we're going to break above this or come back down from it yet. The market's just right at that point. We're looking a little more positive with the NASDAQ 100, where we did get above this trend line, so that is looking pretty good. Is the NASDAQ 100 going to bring the S&P up, or are we going to see some weakness in the NASDAQ 100 to bring the S&P down? We look at the NASDAQ 100 to Dow ratio, we're back at a really high reading now. Doesn't mean we can't go higher from here, but in the past, when we got to these levels, it did pose a problem for the market. So what's our outlook for Tuesday? Bank of America, Morgan Stanley, and Charles Schwab will all release their earnings reports before the market opens on Tuesday. The technicals are positive, but they are overbought. We will be getting retail sales as far as industrial production and capacity utilization, business inventories, and the NAHB Housing Market Index. We're keeping an eye on the geopolitical events, but the market is fixated on inflation and interest rates, and right now they're painting a rosier picture, thinking that things are going to look positive going forward. But remember, that can change at any time. Here's the updated version of the economic reports that will be released this week. We're also going to have 2 Fed speeches on Tuesday. They'll be at the same time. And Edward Yardeni made a funny comment for FOMC, the Federal Open Mouth Committee. These guys like to talk. Well, after today, they go on lockdown where they won't be able to give interviews and talk and give speeches and so forth. Looking at the Stock Traders Almanac statistics for July 18th, we're neutral to negative with the Dow and S&P, where we're a little bit more positive with the NASDAQ. Also keep in mind that we're coming up into expiration week for options, and we're up about 57% of the time and down 42% of the time. We will be on the 11th trading day of the month, where historically this is where we've seen some weakness starting to come into the market. Also for the NASDAQ, we go up until the middle part of July and then typically, historically, have seen some weakness. Doesn't mean that's going to happen this time. This just suggests that we have seen that in the past. So what are our scenarios? We can't really go with the down one right now because our technicals are positive, but we are overbought. We're going with the up scenario right now, but please beware that we are overbought. We're not going with the sideways trend right now because our ADX is above 20. It's above its moving average, so it's suggesting that we are in a trending environment. What are the warning signs? The long-term signals on the weekly charts, it could be signaling that we're at a top. So far, it has not done that. It's dealing with those levels right now. Seasonally and historically, this is a weak time of the month. Our oscillators are negatively diverging, but they are showing some improvement. The VIX is still showing complacency and it's acting kind of strange. That's why we look at the VIX to correlation chart. The cumulative new highs, new lows for the NASDAQ continue to show weakness. We're still above that level. Going back to 2007 on the 3-month yield, that was right before we saw the great financial crisis. The S&P growth is weakening. It's in an uptrend, and it improved in Monday's session, but we want to see that have some more strength than what it has had lately. Earnings season is coming in, and it'll be positive or negative based on how these companies report. The positive signs. We do have positive seasonality and setups that remain further in the background that align more with the longer-term perspective of the market. The long-term daily chart for the special K is positive, but the weekly chart continues to be negative. Our longer-term equity put-call ratio is positive. The S&P remains above the downtrend channel upper line. We're still in a risk-on posture. Lower price levels, even though we haven't fallen all that much, so far we can say that they are providing support. The S&P is outperforming utilities, which often gives support to the S&P. The NASDAQ and NASDAQ 100, they have now broke out above this overhead resistance. Can they stay up there? Can they build on this? Or are they going to start to fall back? The Staples to S&P 500 ratio is declining, which again gives support to the S&P. The small cap, based on the Russell 2000 index, as well as the mid caps, generated recent golden crosses. Please be aware that the S&P small cap index has not generated a golden cross. Small and mid-cap growth continue to be positive, especially the mid-cap growth, and the copy curve has generated a buy signal. So our conclusion, the S&P remains positive, but it is overbought. We can say that in the short term, and we can say that in the intermediate term. Long term, we continue to be positive. Thank you. I hope you found this helpful. Have a really good day, and I will talk to you in the next video.